CPI is in, and we're going to break it down for you guys, give you a full rundown of what's happening not only in the crypto markets, but also take a look at the broader market of global macro. All of that today. My name is Paul Barrow. Welcome back in the Tech Path. I want to thank our sponsor today, and that is iTrust Capital. If you guys are looking at long-term holding of your crypto and you want to do it in an IRA, this is one of the steps you can take, and you can convert an IRA into this. You can start one. Lots of options here to buy, sell crypto, as well as gold and silver. All of that happening out there. 9 billion in transactions, 200,000 accounts out there. So you would join a lot of people in going over to iTrust Capital. Make sure and use our link. It's going to give you a $100 funding reward. Pretty simple. Use it. We'll leave a link down below. It does help the channel. All right, so let's get into a couple of points today. And this, of course, is the CPI number coming in. Breaking April CPI inflation rate falls to 3.4, in line with expectations of 3.4. Core CPI was 3.6, in line with expectations around 3.6. But remember, PPI came in a little bit hot, so it is a third straight monthly increase in PPI inflation. And I think a lot of people are still looking at this. Can the Fed really cut through the summer? Will Powell maybe take a look at a potential rate reduction? This is the biggest question that Wall Street, the best analysts out there, are asking. And it will have a little bit of an indication, I think, but it also has a scenario that plays into something which many people look at, and that is, what is the aftermath of a pivot? So just to kind of be in line with that, here was the PPI inflation number. It rises to 2.2, in line with that. The core PPI was 2.4, in line with expectations. So, but it is up, for the 3 straight months. I'm going to go to a clip real quick. This clip is going to get into a little bit more around what the reading was, this current one in April, and what's really happening. Listen in.
No, I mean, we had 3 really strong numbers. I mean, 0.28 was the 2 decimal place change, and that's about 3.5% annualized. So we're still a far cry from anything close to 2%, unless, Joe, and the conspiracy theorist in me would never suggest this, but maybe the Fed ultimately changes its target, because I don't see how you get to 2%. And the equity market loves it, but with profit margins at an all-time record high, unless you got this great productivity surge, lower prices means lower margins, which means lower stock prices. So right now it looks great, but we'll see.
They might not call it moving the goalposts, but there's different ways to move the goalposts, aren't there?
Question is, why is Powell so afraid? And the answer, Joe, I think, is the banks, the commercial banks. If you look at the portfolio losses and their mark-to-market and hold-to-maturity portfollos for treasuries and mortgages, and they would know that. The market wouldn't know that, but the Fed would know that, because they regulate these big banks. Because when Powell pivoted in December, there was nothing to suggest in the data at that point that really that was they're going to be cutting as much as the markets thought. So I think it might be something there. You're
on there, that clipped off a little bit, but the point he's getting at is, if we were to see a flip, a pivot, from Powell, how would the big banks react? Also, what would some of the rest of the markets deal with, especially on the component of earnings? Because we'll see a lot of different earnings coming out on each quarter. We're going to be nearing another earnings report very soon. So I think this is going to be it's going to be one to watch, because one, April is down, great. You've got a May report coming in June, which is where things, I think, will get very serious as to whether or not we could see a late summer cut and going into the fall. But if you look at Trueflation data, this is U.S. inflation right here. I'm on the 6-month. And remember, we had this height of around 2.8. This is on Trueflation. Let me kind of zoom in on that for you guys if I can a little bit. There you go. About 2.8. And then right here in February, we dropped to that low, which literally got into that 1.97. This, of course, and I'll explain what Trueflation is and the differences here in a second. But then it spiked back up. We did see that. This was a time when Powell was a little bit more concerned, if you guys remember, back in March. And then it's been slowly tracking down after that last couple of blips in the market. So is this the time in which Powell could feel like we get maybe an option to go a little bit further down in terms of inflation, and not going to the 2%, but hey, is 2.5 or maybe just under 3 Is that going to be the new standard? And I think that's what everybody's looking at is, the conspiracy theory he was talking about. Will Powell actually say that's our opportunity and that's as far as we're going to go? If you look at the aggregate inflation, this is important because if you guys have been watching our show, you understand this is how much your fiat dollar has reduced in just since 2020. And you look at that 25% less value. In other words, you're spending another 25% on every dollar you spend to be able to get the same thing. Unless, of course, you're investing in, assets. And assets, of course, could mean risk assets, obviously within the securities market, but also within the crypto market. So I think this is the key that everybody's looking at as how do I offset that valuation problem that is occurring around fiat? And hopefully we're starting to see a lot more people realizing this. I think we are. And I think around the jobs numbers, what we're seeing in terms of pricing here in the US, people are starting to wake up to this idea overall. Make sure and drop some comments over on the side, and also make sure and complete the poll. We'll try to get to that here in a second. So here is the example of what Trueflation is. Let me kind of zoom in on that for you guys. The reasons for discrepancies between where we are on CPI and Trueflation is the methodology that they use to calculate Trueflation index. The number of data points that they track compared to the BLS. Notably, Trueflation tracks more than 14 million data points for its real-time U.S. inflation versus the BLS relies on 80,000. So big difference there overall. And the other thing is their data is reported 6 months after collection. So this is why you have those lagging indicators that we talk about a lot here on the show. And it's also why, in many cases, the Fed, in some cases, just misses the mark. They miss the signals to be able to start raising rates. And could they miss the signals to be able to start dropping rates? That's the concern that, of course, stagflation is always on the lookout here. Because if we do get a scenario where inflation does continue to rise and we're still losing job numbers, that's a problem overall. But the fact that we got a flat number is a good thing. This is a good thing because the likelihood could mean that we are on a downward trend for inflation. If that is the case, I anticipate that we're going to see some pretty cool things happening, I think, with Chair Powell. Here's a clip right here of Chair Powell talking about inflation and whether or not it is cooling or not. Listen in.
The U.S. economy has been performing very well lately. We had growth last year of just over 3%, quite a strong year. And it's driven by a number of things. I would point to a very strong labor market where you've got rising employment, you've got rising wages, so disposable income, consumers are spending. Generally, households are in good shape financially. They're not over-levered. And so we see a good picture. Consumer spending has held up very well. As well, business investment has been strong. Businesses are seeing opportunities to invest, and that has helped. I would also point to a fairly large influx of immigration into the country over the past couple of years, and those people are joining the labor force. We're experiencing still a labor shortage in many industries, and so there are jobs, and they're going to work and they're consuming. So that's also boosting growth. So overall, a good picture looking at the data so far. The labor market is very, very strong. It was, I think, overheated a couple of years back, and what we've seen is it coming back in gradually into a better balance over the last couple of years. And now I think if you look at a broad range of data, you could say that the labor market is about as tight as it was before the pandemic in 2019, and that's good. Real wages are now positive, and unemployment has been below 4% for 27 consecutive months, something that hasn't happened in a half century. So, labor market very strong, and again, signs of gradual cooling and rebalancing, so that supply and demand of workers is coming back into balance, which just as we would want.
So Powell looks fairly relaxed here about where the economy is going, and of course, this all drives into that inflation target being hit. Now, many people look at that, as I mentioned earlier, as a potential good thing, but it also could be a bad thing. Here's Scott Melker, Wolf of Wall Street. Everyone seemingly wants the Fed to cut. Wildly popular theory. patently false. After the Fed pivot to rate cuts, the market typically and always crashes. And if you look at it, you can kind of, I'll zoom out on this a little bit so you guys can kind of see some of the rate cuts that have occurred back here from, all the way back to 2000, then here in 2007, 8, what we saw right here in 2020, which is all COVID. These are market blips that definitely start to push the market down. So this is the thing, and our friend Darius Dale, who's been on the channel many times, he talks about that very issue, is that usually after the cut, you're going to see those immediate pullbacks, and that is the time in which there are opportunities. So that is the other cycle that we are considering. Now, it is a little bit different with crypto. We've seen that over the past. If you kind of compare market cuts and periods in time when it did versus what we've saw in terms of a bull run, then you get a little bit of a different story. So definitely one to take a look at. S&P just hit 23rd all-time high this year and is now up 29% since October. Not bad for an S&P 500 for sure. So it means that the S&P has officially added 10 trillion in market cap since October. The index now up 11.5% in 2024. So if there is any good thing right now with the Biden administration, I would think they would be really focusing in on this. But that is still a good thing for at least that side of the camp. If you guys are listening in right now, make sure and smash the like button. We love to get your feedback, and also likes really help other people understand and get a chance to catch these kind of videos out there in their algorithm after the point. So that's your way to kind of share it with the rest. Here's a little bit on Bitcoin ETFs back on the ETF volume leaderboard. Moving quickly up is iShares, of course, and then Fidelity. These are the top two, so obviously big percentage moving there. A lot more activity talking about coming back into Bitcoin ETFs as well, and that is coming from Vanguard. Vanguard is one that we've watched and talked about here recently. Remember, if anybody has been watching us for long, you probably caught one of our clips of the Vanguard CEO saying, hey, we're not going to touch this with a 10-foot pole. That, of course, changed. This guy's out of here, and a lot of changes happened at Vanguard. Vanguard names Bitcoin-friendly former BlackRock exec as the new CEO. Let me kind of zoom in on this article right here a little bit. Ramji overseeing the approval of the launch of BlackRock Spot Bitcoin ETF. And then, of course, a lot of people wondering whether or not he'll try to change the firm's long-held position against Bitcoin. It's going to happen, guys. I think Vanguard's going to be coming in for sure, without a doubt. Bloomberg analyst Jeff Seifert says he doesn't believe that he would be able to see Vanguard launch its own spot Bitcoin ETF product. I still don't put that out of the realm here. So Vanguard feels like they are, I feel like they got to feel like they're being left out by the rest of the market. And of course, who knows? We'll see how this plays out. I want to jump to a clip. This actually was the Vanguard CEO and now Vanguard CEO talking about this prior to him being the Vanguard CEO, but when he was with BlackRock. Listen in.
Which is the first one is that the underlying technology that underpins Bitcoin and the blockchain technology is something we're incredibly excited about. And we're incredibly excited about it because it removes frictions, or at least has the promise of removing frictions across the ecosystem. And for us in the role that we play, which is all about how do you take out friction in the ecosystem, whether it's a custodian, whether it's trading and settlement times, I think the underpinnings are really, really powerful for us. So that really sparked our interest in this whole area a number of years ago. And the second thing is all about access. So nearly 20 years ago, we launched our gold ETFs. And the gold is held in custody in a vault, which is remote from us, but it's now easier to transact in gold using our gold ETFs. And we're applying that same philosophy to other new and emerging asset classes like Bitcoin, just as we did to gold 20 years ago, just as we did to bonds 20 years ago. So I know that doesn't answer your question.
Almost.
But we really just see this as about how do we embrace new technologies that are trying to reduce friction, and how do we help investors gain access to parts of the market that had otherwise been more difficult or really expensive or opaque for them to access otherwise.
All right, so you kind of saw the writing on the wall. I think Vanguard is probably going to see the writing on the wall as well. And things may change there. And of course, if that changes, then you've got another titan coming into the ETF market in one way or the other, whether it is drawing a fund or possibly going into the investment community and jumping in that way. So you look at the Bitcoin movement right now on the day. I mean, we are absolutely on fire at 61.5, going up to where we are holding at 66. So nice move on the day, up almost 7.5%. ETH coming in right now at a 4.5%. Some interesting points here is when you look at the ETH chart, and we're going to probably take a look at this a little closer, it's still underperforming in my opinion. Is this the time when Ethereum actually gets a little bit in front of itself and maybe can start doing something pretty special in terms of getting an actual run underneath it? Is this the time? Let me know, guys, in the comments down below. Always love to get your feedback. The other thing that is interesting, and I'll get back to some charts and we'll try to look at some other tokens before we leave out of here, but this is a very important piece. And that is this statement right here from Ryan Selkis. This is the Masari guy. Breaking second hand, he basically came in. He was over at the Trump conference. Senator Schumer told Senate Democrats to vote their conscience. And this was in reference to the SAB 121 when it comes to the vote in the Senate. So this seems to be a push and an approval that is bipartisan. This is going to get interesting because if this gets through the Senate, because we know it's going to come through already came through the House. So if it gets through the Senate, are we going to be in a position where maybe the president, who has guaranteed to veto this bill, actually has to eat his words and pass this as a bill? If that gets passed, I think that's going to be a big indicator of the tolerance and also the appetite for what's happening in DC. Ron Hammond and I had a chance to chat a couple of weeks ago. We were talking about this very issue, that there is a new, somewhat refreshed vision of what's happening in crypto, and it's getting near the most critical period of time for a lot of these candidates. So they're having to reveal where their position is. So if you guys are out there and you haven't talked to your representatives yet, go out, find your representative. You can email them right there on their websites, make a phone call, tell them how you feel about crypto. This all helps in reference to being able to really get in the minds of what's happening in DC. So let's go over to our poll real quick, and then we'll jump into some questions and some charts. What would you rather buy right now? Bitcoin, Ethereum leading the place with 41%. And then random altcoins, nice, coming in number 2 at 38. Oh, very close too. So everybody likes the altcoins right now. And then GME or AMC on Solana. Did you guys jump into that? I'm just kind of curious if people got into that one. I mean, we did some little, fun trades with that. Nice little moves, but it's one of those things I think, time to move on, as they say. Okay, a couple of things right now. Questions, 66K Bitcoin incoming. I think we're already there. Yeah, we're there now. 66K is there. Do you guys like this actually? Let's take a look here. I mean, we could possibly come into this local around 66.8. Next potential opportunity right there hovering around the 70K mark. So that would be a good one. I'd like it. ETH will be the blah until the ETF is approved. That's probably going to be later in the year, guys. Unfortunately, I did not see that happening in May. I just joined the movement, went into GME and AMC stock right now. That'll be interesting. You and Dave Portnoy, I think, are jumping in on the stock side of that. What else do we have? I disobeyed and only gently tapped the like. Very well, thanks, Fox. I appreciate that, man. Super chats coming in. Thank you so much, guys. We always appreciate the super chats. This guy says he's in on GME and also Wall Street Bets. So you guys are still playing out there in the degen space. I love that about you guys. It's just, take no prisoners. Take no prisoners all the time. Gummy staking has begun. What are they staking over there? Like, I'm not sure. I'm not into that one. All right, Powell pumps our bags. Yes, he did, and that was a big pump. Nice pump for where we are right now. I'd like AVAX to return to its pre-vet all-time high. You know what? Let's take a look at the Avalanche chart. Getting off the floor and coming back into a zone right now around 35. I think the pressure, it's got to break through, is around that 37 range if we start to see a little bit of movement there. One thing about Avalanche is it has had and has been in a negative sentiment range for the last 3 weeks. That is something that has not been something we've seen very often, and we do that with our market sentiment data. So is this a turnaround for Avalanche? Maybe so. We'll be watching this over the next week to tell. 73K Bitcoin by Friday. Okay. Let's take a look at that, guys, because you're talking 2 days away, and you want a 73 Bitcoin by Friday. That is definitely coming back to the all-time high. So, the range, remember, we had that downward sentiment flag right there at the top, and it definitely showed out on the trend that we're in right now. Could this be the breakout that we're looking into? This is going to get intriguing for sure. 3 top coins you're waiting to DCA into, Paul. All right, so I've got to get into some other altcoins. As you guys know, we're in a lot of things right now. I still like, obviously, Solana, Avalanche. I've been in and out of Matic, Chainlink I still like. The other ones that I'm really kind of in and out of has been ICP. Other ones I like outside of that, the one that is kind of interesting that I always want to jump into, and that is Hedera, HBAR. And I think it's just a matter of time. Where are we on HBAR right now? So it's getting a little bit of a cycle pump. Remember this little jump pump that we saw? This was a nice one too, but it was a short trade for me. So this will be a good one. Will Cardano remain a top 10 cryptocurrency market cap this year? I say no. I think there's going to be so many opportunities to displace it this year, and so many new projects too that are coming in. Render is starting to recover a little bit. It's still coming up quite a bit. What was the gain on Render over this last little bit? Where are we right now? Setting it at 46%, and that's if you've just been trading it over the last few weeks. So nice move there. You guys know we love Render. This is a long-term token of the channel. In fact, I think we probably were one of the first channels out there calling it out a couple of years ago of seeing it as a future token. Who else says 6 weeks on the sidelines watching the meme kids play, finally over for a little while? Maybe so, but don't count your chickens and your kittens just yet. We may still see some more meme activity out there. So a lot happening on that side of it. Gaming, I'm still watching very closely. And then, of course, all the cornerstones that we still like, which I think are going to play out a little bit later in this cycle. We should probably do an update on portfolio for you guys, give you a full understanding of where we are on this stuff, and go that direction. As I said, make sure and subscribe to the channel right now. It's one of the best places that we think gives you the most information, and really no moon boy stuff here. I mean, we really go in deep, and hopefully you guys like it that way. If you're not in the Diamond Circle, get in on that. It's our free self-help group, we'll call it. And it's very good because you get an email every day from us, kind of catching you up on what's happening on the YouTube channel, but in some cases we'll drop additional content there. So check it out. Follow me on X, @Paul Barron. We'll catch you next time right here on TechPath.